Small cap versus large cap stocks. Which grows faster? If you invested $10,000 into small cap stocks instead of large caps 5 years ago, you'd have made an extra $47,000. That's life-changing money. And today, I'm showing you exactly why, and whether you should actually do it. Hey, I'm breaking down the real numbers between small cap and large cap stocks so you can stop guessing and start investing with confidence. Part 1. What the heck are we even talking about? Let's get specific because most people get this wrong. Market cap is just the total value of a company's stock. You calculate it by multiplying the stock price times the number of shares outstanding. Large cap stocks? Companies worth over $10 billion. Think Apple, Microsoft, Tesla. These are household names. When you buy an S&P 500 index fund through Fidelity or your 401k, you're mostly buying large caps. They're the blue chips, the boring, reliable companies your grandma owns. Small cap stocks are companies valued between $300 million and $2 billion. These are the companies you've never heard of. A medical device startup in Ohio. A software company scaling in Austin. Real businesses, but way smaller players. Mid-caps sit in between, but nobody cares about them. So we're not spending time here. Here's the critical part. Small caps are riskier because fewer people own them. Fewer analysts follow them, and they can go bankrupt way easier. But that risk creates opportunity. Part 2. The growth numbers that actually matter. Let's talk real returns. Over the last 20 years, large cap stocks in the S&P 500 have averaged about 10% annual returns. That's solid. That's the baseline. Small cap stocks? 15 to 18% annually over that same period. 3 times the upside potential. But here's where people get emotional and make mistakes. In 2022, small caps got absolutely demolished. Down 29%. Large caps? Down 18%. Yes, you got hit harder. That's the trade-off nobody wants to talk about at dinner parties. Let me show you with actual money. Say you're 30 years old with a Roth IRA. You throw $10,000 into a large cap index fund through Robinhood or Fidelity. At 10% annual returns. By age 65, that's $117,000. Same $10,000 in small caps at 15% returns? You're looking at $463,000. That's not a typo. The difference is $346,000. That's a house down payment. That's early retirement. That's life-altering. But, and this is huge, that assumes you don't panic sell when small caps drop 30% in a bad year. Most people do panic sell. That's why they don't get those returns. Part 3. What you actually should do. Here's my honest take. You shouldn't choose. You do both. The smartest investors I know hold 70% large cap, 30% small cap. Why? Because large caps give you stability and sleep at night money. Small caps give you the growth that compounds into real wealth. Your 401k? Leave that in the S&P 500. Your employer match is already free money. Don't get cute. Your Roth IRA? That's where you get aggressive. You've got 40 years until retirement. You can afford to take swings on small cap index funds. Put maybe 30 to 40% there. Specific funds that track small caps. The Vanguard Small Cap Index Fund, ticker VB, or the iShares Core S&P Small Cap ETF, ticker IJH. These give you diversification across hundreds of small cap stocks so you're not betting everything on one company. Don't buy individual small cap stocks unless you actually know what you're doing. That's how people lose money thinking they're investing. The real play is consistent monthly contributions into both large and small cap. Automation is your best friend. Set it and forget it. $25 a week into small caps. $50 into large caps. Doesn't matter. Just make it automatic. Over 10 years. That consistency compounds like crazy. Over 20 years? You're looking at generational wealth. That's not hype. That's math. The move. Small caps grow faster. That's proven. But they're scarier. Most people can't handle the volatility. So they stick with boring large caps and wonder why they're not rich. You're different. You're here watching this. You understand that growth requires some risk. The question isn't small cap or large cap. It's both. Strategically allocated based on your timeline. Open a Roth IRA if you don't have one. Throw $500 in today. Split it 70-30. Watch it work for you while you sleep. If this helped you, smash that subscribe button. This channel is about building actual wealth, not get rich quick nonsense. New videos every week. Don't miss them. Let's go.